This is a video chart for HNAB Biosciences brought to you by All Penny Stocks with technical analysis by Andy from Understanding Pincher Plays. HNAB Biosciences is a NASDAQ bulletin board stock trading under the ticker HNAB. I did take the liberty of putting a couple lines on here already because I want to go through this quickly and show you some other things from Classic TA. This is a bottom support level at 13 cents, an ultimate hold level it needs to hold. It's a 52-week chart. You don't want to see it break below there and set a new 52-week low. It's made some strong moves in the past, and we want to see it hold that. Come back and touch the candles in a moment. The MACD is in what they call positive divergence. Over the same period of time, the price per share is trending down, while the indicator, in this case the MACD, is trending up. We're going to want to see this trend continue because sometimes it'll give you an indication that a reversal can happen. So you look for things like positive divergence. You can see the histogram is about ready to break through zero, telling you that the signal line is about to be crossed. So we're going to look for this to continue and continue its uptrend to the north side and ultimately break through zero. A classic pincher formation, PPO ADX pinch back here at the beginning of the year. You know, the ADX is down or is up very high, the PPO is down very low. You're going to look for a pop to come about that point, and sure enough it did. One thing about pinchers is they'll give great moves, but they'll often retract right away afterwards. And then you look for divergence to the zero to the money line for both the PPO and ADX. You look for another move at that point. And you'll see it took about 2 weeks right through there, but then came the bigger pop. You know, another 100% move from 17 to 35. Classic pincher play back there, beginning part of the year. Again, the PPO with a little slight trend emulating the MACD, kind of trending back towards zero. We're going to want to see a cross, histogram break, and this uptrend to continue. ADX is in a holding position here, kind of, for lack of a better word. It's in what they call a trading pattern, no true trend to it. When it's down below 20, it's what they call trading, not trending. A little bit more volatility to it, and no real strength of the overall candles. So what happens is, if this is going to continue, this doesn't tell you which direction. It tells you only strength. So when it gets above 20, certainly above 30, that's where it's entering a trend. So you're going to want to see this. If it's going to move to the north side, this green line, the positive DI, is going to go with it, and it'll give you a better indication that the strength is to the buying side. So right now, in a trading pattern, not too much is gained from it, but we're seeing a little bit of an uptrend to it. The trend is gaining steam, it's gaining strength, but as to which direction, it's not really definitive yet. MFIs are in a very nice position, all three of them tucked together. That's what you look for. This is a good example of why you use multiple indicators in combination, because if you just look at this one indicator, you're saying, boy, money's coming back into this. This chart looks really good. But it's not necessarily true when it's combined with the accumulation distribution, which is in a bit of a sideways channel right here. Bulls and bears kind of duking it out. Nobody really winning with the buying and selling. It does lean a little bit to the downside, which is pretty true as the price per share is trickling down. Jake and money flow is formulated a little bit differently than the money flow. This says that money's going out of this stock. It kind of leans to the side of the accumulation distribution, teetering to the downside. You want to see this heading back towards zero. It's plain and simple. You don't want to see it buried down here in the red. It still has a possibility of turning and creating a little bit of an uptrend to it. So you want to keep an eye on this just to see if this is going to make a turn. And if you can get all three of them showing that money's coming back into it, that's where the strength lies in the indicators. CCI is breaking back below negative 100. That is not a buy point for most people that are technical traders. The buy point is the break back up through negative 100. That's where people will be looking at it. So right now you're going to want to see this make a turn, hold them support levels, and some people will be looking at it as a possible buying opportunity. Full stow is in a great position. Being down low, there's plenty of room for this to make a move. Up highs for momentum traders, down lows for bottom feeders. So we're going to look for this to try and break back up above 20 and get some real strength to it, but still in a good position for anybody looking for a bottom play. The tricks, I drew a line on already to show it still has an uptrend to it overall. Back here, you see this was the line about April. Nice trend to zero, and if you remember, that's where the pop came, right through there. So this is just taking it to an even larger scale. You're going to want to see this continue to trend and head back towards zero. Right now, you just got a negative cross of it. The tricks is very slow. It's a very smooth indicator. You're going to want to see this not to get too much separation, or it can't recover very quickly. It'll never hold that trend line. It'll be down in here somewhere. You're going to want to see this start to make a turn here in the near future. Our RSIs are not in the greatest position right now. Still, they're not oversold yet, so there's still plenty of room to the downside on them. You're going to want to, so we're going to need to get this this black line, the 7-day, to start to make a turn and try and pull the longer terms with it. You can see 50 has been a struggle for HNAB over several months now, so you're going to want to see this start to try and make a turn. One thing to keep an eye on. Right there is the first level of support. It's 14.214. Has to hold that when it comes down. It just held it back in June. Again, beginning of August popped up. If it doesn't hold that, chances are it's going to challenge 13. If it does, if it challenges 13, there's not a great deal of support from it. There's a chance it's going to fall through it. So some people may say that this is a buying opportunity here at 14. Of course, you're paying attention to everything else in combination with it. I don't have a L2s up on it to give any intelligent comments on that as to what kind of spread there is or anything, but needs to hold 14 cents, or it's probably going to challenge 13. And if it challenges 13, there's a good likelihood it's going to go through it. These indicators that are looking decent at this point will then turn ugly. Trend lines will be broken. Separation will happen in between them, and you'll be looking down here somewhere for another possible reversal. On the upside, some resistance is going to be seen kind of right where it is. You'll notice that it tried to gap up. Pull that down just a hair farther. Down to right around 16. Tried to gap up yesterday, hit it, came back down. Today gapped up, hit it, came back down. So this area right there about the 20-day moving average, the middle Bollinger Band, again, you're combining moving average resistance with price per share resistance. You can see back in early July it was a support level. It finally fell through it, and now it's fighting to try and get back above it. After that's going to come, we're just going to move this one around a little bit so not add too many lines. But we're going to see some right there, right about 17.5. What you'll also see right there at the end of that line, put the cursor on it, that's where the 50-day moving average is. That's a pretty significant source of moving average resistance. So that's going to be a tough spot for it. Even if it can make it through this, look for the 17.5 to be more of a challenge. And ultimately, this start's going to really gain strength. It's going to have to take on 19, right up here where it was a solid area of resistance for the last several months. That's the upper Bollinger Band. So if it can make a move above this initial resistance and then the 50-day, well, then this is the case where this chart gets pretty nice looking, because the indicators that are starting to trend will gain even more strength. You'll see the money line break, things like that. This is how charts, are so dynamic, of course, that if it breaks down, it's going to get ugly. Right now, it's kind of in a bit of a holding area where it needs to hold supports and try and make a move. Those are what I'd be looking for in the near term with HNAB, as if I'm looking at possible buying opportunities, and what to look for in the future if it starts to make a move north. There's some positive things and some negative things about HNAB. Right now, it's definitely leaning towards the negative side, but if it can go down and hold these support levels, things can change pretty quickly. One of the reasons I wanted to do this chart was to show, oops, I'm just going to put that right out of here. I wanted to show the power of, put this where it needs to be, of trend lines. A very common thing with trend lines. See, this had a nice trend going up to it, nice uptrend when it's made its move. When it breaks back down through them, many times they'll want to come right back up and challenge the backside of that trend line again. And there you see it popped up through it and came back down. And when it can't hold that trend line the second time around, usually this chart is going to trend down a significant amount past that. That's why I wanted to put this out. You put this trend line on, you can see what I mean. When the trend line fell, people, are probably getting nervous, but, sometimes it'll bounce right back up. It might even come down here and it'll bounce back up. It'll challenge the underneath side of that trend line almost immediately. And here's a good case of HNAB where it made a strong bounce, but when it can't hold it the second time around, a lot of times you got to be patient and wait for this, because it's going to continue to trickle back down. And this is just a clear-cut case of what it did at that point. And I just really wanted to point that out as to something to look for when you're analyzing charts, and they break that trend line. Often very weak. You don't want to see trend lines fall. Look for it to come back and test it. And then if it tests it again on the backside and it can't hold it, then look for that chart to continue down south farther and indicators to have to get lined back up. Usually there's plenty of time before you're rushing into trades and things like that when it breaks that trend line the second time. I just wanted to make sure I pointed that out, a little bit of education for you to keep an eye on in the future when looking at charts. This is Andy taking a technical look at HNAB. Again, this is just my interpretation. I'm not a financial consultant. Investors are strongly encouraged to perform their own due diligence and consult a qualified financial advisor before making any investment decisions. Past performance is not indicative of future results. To start learning technical analysis, stop by the All Penny Stocks website and click the link to Understanding Pinch Replays, and you'll be on your way. Thank you.